Hi there, welcome to The Align Perspective by Datalign. I'm Claire, your AI host, and joining me is my AI friend, Henry.
Today we're unpacking 7 major life events where basic advice just doesn't cut it. Marriage, inheritance, starting a business, and more.
Because your life isn't one size fits all, and your financial planning shouldn't be either.
Let's get aligned.
Welcome back to The Deep Dive. We're part of the Align Perspective program. Today we are diving deep into something really fundamental, navigating those truly significant financial moments in your life.
Yeah, the big ones.
Exactly. And we're not just talking about the standard checklists, for buying a house or getting married. We're talking about when your personal situation is, well, complex, maybe unique, and it definitely goes beyond the usual generic advice.
Absolutely. And for this deep dive, we've got a really solid source. So, our mission today, basically to unpack what sophisticated financial planning actually looks like during these major life shifts. We want to get a handle on how you approach decisions when your financial picture isn't, cookie cutter. And crucially, explore when professional expertise stops being just helpful and becomes, well, pretty essential.
Yeah, that core idea in the guide is so spot on. These big life events, getting married, starting a family, changing careers, they're common, sure. We all know people going through them. But the financial reality for each person, that's anything but universal. Your assets, your job path, family history, how you feel about risk, it's all different.
Right.
And trying to slap a standard playbook onto that kind of complexity, it just doesn't work. It falls short.
Exactly. The guide kicks things off by asking that fundamental question. Why do we even need to go beyond the standard stuff in the first place?
And it uses those examples that honestly feel really familiar. Like maybe you have a friend wrestling with how on earth to combine investment accounts before the wedding. Or maybe your sister's just completely overwhelmed by the tax side of inheriting the family business she never expected to run. We all have stories like that. Or maybe, like you said, we're living one right now.
Precisely. And the guide makes this critical point. These aren't just math problems. They're not just logistics. Combining finances when you marry, it's not just about merging spreadsheet numbers. It's about dealing with different money histories and trying to blend hopes for the future. Inheriting a business isn't just getting assets. It's family dynamics, complex tax stuff specific to that business, deciding about a legacy.
Generic advice just can't handle those layers.
No way. It doesn't have the depth.
So these real-world complexities, they're why the guide frames its whole discussion around 3 key things. What sophisticated planning actually looks like, how you approach your unique situation, and the vital role professional expertise plays in pulling it all together.
Right. So let's actually dig into some specific transitions the guide highlights. Let's look at what pushes them beyond the basics.
Okay, first up, a huge one, getting married. The standard playbook, pretty straightforward. Joint accounts, budget, maybe some insurance, update beneficiaries. Basic stuff.
Yeah.
Sensible.
Sure, the basics are fine. But the guide brings in what it calls the next level perspective. It points to research showing finances are actually the #1 source of conflict, like in 40% of disagreements for long-term couples.
Wow, 40%, that's high.
It is. And what's fascinating is the guide suggests this isn't just squabbling over spending, it's because money represents these deeper, often unspoken values.
Like what? Security, independence.
Exactly. Security, independence, control, maybe how you show care for family. And this gets really complicated when partners come in with significant assets or different debt levels, or maybe there are kids from a previous marriage or existing estate plans already set up. It's about merging 2 financial lives into a shared future, but without just erasing the past.
That makes so much sense. It's not just about combining bank accounts, is it? It's like merging 2 financial universes. So what are some of those specific beyond the basics issues, guide flags for marriage?
Well, one big one is figuring out taxes, not just as individuals anymore, but as this new tax unit, while maybe still needing to keep some individual financial goals separate.
Okay.
Another is structuring asset protection, making sure it works for both partners, especially if one person has, say, a higher risk job or already has significant wealth they brought into the marriage, and coordinating retirement planning.
Yeah.
That gets tricky when you're blending existing portfolios that might have totally different strategies or timelines. Then there's managing inherited wealth or family businesses within the marriage. Who's in charge? How are decisions made? What are the expectations there?
Yeah, that sounds messy.
It can be. And finally, sophisticated estate planning. It needs to think about the legacy you want to leave together, sure, but also how to handle individual legacies or responsibilities, like to kids from prior relationships. The guide really stresses that in complex situations, estate planning isn't just about protecting assets, it's about protecting the relationship itself and its boundaries.
So when you're juggling all these layers, how does the guide say an advisor actually helps?
Well, the guide suggests an advisor can help structure that financial merger strategically right from the beginning. They can help design asset protection strategies, find ways to optimize a combined tax situation, coordinate estate planning that respects both individual and shared priorities,
Okay.
and blend investment strategies that might seem really different at first glance. And crucially, the guide points out their value in facilitating those tough conversations. Having that neutral third party can make a huge difference.
All right, let's move on. Another big one. Buying a home. Standard advice. Save a down payment. Get pre-approved. Budget for closing costs and furniture. Simple enough.
On the surface, yeah. But the guide offers this next level perspective. It frames homeownership not just as a lifestyle choice, but as a really crucial long-term wealth-building decision. It even cites some compelling data. Remember the Federal Reserve's 2020 survey of consumer finances? It showed homeowners had like 40 times the net worth of renters back in 2019.
Median $255,000 versus what, like $6,300?
Exactly. So if you already have investments or other wealth strategies going on, buying a home isn't separate. It's part of that bigger picture. You might be weighing, using cash versus getting a mortgage to keep cash free for other investments, or trying to time your purchase with the market or for tax reasons.
So the beyond the basics issues here are about how real estate fits into your whole investment portfolio. So is it diversification? Is it maybe too much concentration in one asset?
Right. And there's the complex decision around timing the purchase. Based on the housing market, sure, but also your personal cash flow, your liquidity needs.
And structuring the mortgage itself, that becomes more than just finding the lowest interest rate.
Yeah, definitely. It involves thinking about the tax deduction for mortgage interest and how that fits your overall tax picture. Or maybe carrying a mortgage lets you keep capital invested somewhere else that could potentially earn a higher return.
Using leverage strategically.
Yeah.
Got it. The guide also mentions thinking about investment properties too.
Yes, deciding if, when, and where to maybe buy rental properties or flip homes, that becomes a big strategic choice affecting cash flow, debt, diversification. And finally, for some people, there's sophisticated planning if they intend for a property to become generational wealth. That brings in estate planning stuff around how it's titled, future tax basis, things like that.
Given all those layers, how does an advisor fit in here, according to the guide?
The guide says an advisor helps integrate those real estate decisions smoothly into your overall wealth strategy. They can model different financing options, show you the long-term tax and liquidity impacts. They can help coordinate the timing with other financial things happening, like career changes or retirement. They can evaluate potential investment properties in the context of your whole portfolio and just make sure the real estate piece aligns with your overall risk tolerance and financial goals.
Makes sense. Okay. Starting a family. Standard advice. Get more life insurance. Maybe open a 529 college fund. Definitely write or update your will. Budget for diapers and childcare.
Yeah, the usual checklist. But the guide's next level perspective here is really powerful. It says family planning adds new weight, new complexity to every single financial decision you make after that. Affordability, long-term security, trade-offs, it all gets more intense. Especially if you've already built some wealth and now you're trying to balance saving for retirement with future education costs or managing existing investments while facing new expenses. It forces you to reevaluate your investment timeline, maybe even adjust how much risk you're comfortable taking.
And the guide points out some significant beyond the basics issues too, like structuring education funding optimally. It's not just throwing money in a 529.
Exactly. It's considering tax advantages, maybe thinking about potential financial aid eligibility down the road, and coordinating it all with your other savings goals.
Okay.
And coordinating childcare costs, that's not just a line item in the budget. It's a financial decision that ties into career timelines and impacts your ability to save or invest. Planning for healthcare costs gets more complex too, especially if there are any special needs to consider. That can require significant long-term financial planning.
And trying to integrate all these new family goals with your existing long-term plans for retirement and your estate, that must be a real challenge.
It absolutely is. And for families building substantial wealth, there's the whole idea of intentionally building multi-generational wealth.
Yeah.
That involves sophisticated gifting strategies, trusts, that kind of thing. The guide highlights these aren't just simple add-ons. They fundamentally change your financial landscape.
So how does an advisor help navigate this according to the guide?
The guide suggests an advisor can model different family scenarios. What if you have another child? What if one parent stays home? To see the long-term financial impact. They help structure education funding, thinking about both tax efficiency and potential aid. They help coordinate the financial timing with career moves and investment strategies.
Okay.
They assist in planning for healthcare costs, including potential long-term care needs, and they help adjust your overall investment strategy to reflect maybe a different risk tolerance or new liquidity needs tied to family expenses.
Career transitions, another big one. Can seem simple, but often isn't. Standard stuff. Research salary, negotiate, check the benefits, roll over your 401k.
Right. But the guide's next-level perspective makes it clear. For many professionals, especially as you advance, compensation gets really complex. We're talking about equity compensation, stock options, restricted stock units, or executive bonus plans, or making the leap to entrepreneurship. These changes have major wealth implications that need sophisticated analysis, way beyond just comparing base salaries.
Right. So the beyond the basics issues involve really evaluating the total compensation package, understanding the potential long-term value, and, crucially, the tax treatment of that equity.
Exactly. Optimizing stock options or RSUs means understanding vesting schedules, strike prices, the tax hit when you exercise or sell. It's complicated stuff. Managing rollovers and keeping benefits going, especially complex things like executive perks or deferred compensation, needs careful planning so you don't mess up.
Yeah, you don't want to make mistakes there.
No. And the timing of a career move needs to fit with your other financial goals and cash needs, like buying that house or planning for retirement. And if you're moving into a role with variable income, like sales or starting your own business, planning for that income volatility is absolutely critical.
According to the guide, what's the advisor's role in a complex career transition?
The guide says an advisor is key in really analyzing the total economic value of those complex comp packages.
Yeah.
They can model different equity scenarios. What if the stock price goes up? What are the tax implications? They help coordinate the timing of leaving one job and starting another with vesting schedules and tax planning. And they integrate the whole career move into your broader wealth timeline and long-term goals.
Let's talk about a really tough one. Navigating divorce. The standard playbook involves, understanding the laws in your state, gathering financial documents, maybe trying mediation, updating beneficiaries, and your will.
Yes, those are the basics. But the guide's next-level perspective really highlights that when divorce involves substantial or complex assets, it demands a much more sophisticated strategic approach. This isn't just splitting the checking account. You might be dealing with valuing a business, complex stock options, real estate in different states or even countries, intricate retirement plans, assets held in trusts. The basic checklist just isn't enough for a fair and financially sound outcome.
So the beyond the basics issues are things like structuring how assets are divided to get the best tax outcome and future growth potential, because how things are split can have huge tax consequences later.
Absolutely huge. And managing the division of really complex assets like a family business, diverse investment portfolios, multiple properties that adds layers and layers of complexity. Planning for potentially significant income changes and helping both parties establish genuine financial independence after the divorce, that's a major hurdle. Coordinating the financial settlement with long-term retirement planning and updating estate plans is critical. And finally, protecting and rebuilding credit and investment capacity after the financial upheaval is essential for future security.
How does the guide say an advisor helps during such a difficult transition?
The guide really emphasizes the value of an advisor who understands the financial ripple effects of different settlement options. They help coordinate asset division strategies to minimize future tax hits. They help develop plans for financial independence after the divorce.
Okay.
They assist in evaluating those complex assets so they can be divided accurately. And they help rebuild an investment strategy that supports the new financial reality for each person.
Receiving an inheritance often sounds like hitting the jackpot, right?
Yeah.
Standard advice. Understand the taxes, maybe pay off debt, build up your emergency fund, invest the rest.
It can be simple sometimes, but the guide's next-level perspective shows that substantial inheritances often bring unique complexities. You might inherit part of a private business that needs active management or tough decisions, or real estate in different markets you don't know well, or assets tied up in complex trusts with specific distribution rules.
Right.
And often there are family strings attached, shared ownership of a vacation property that needs managing, expectations to continue charitable donations the deceased made, or even pressure to support other family members.
Those definitely go way beyond just depositing a check. So the beyond the basics issues involve strategically fitting those inherited assets into your existing investment strategy.
Exactly, integrating them thoughtfully. And optimizing the tax side, which can be tricky depending on the asset. Understanding things like stepped-up basis for assets that have appreciated, and managing those inherited businesses or real estate properties. That requires different skills than just managing stocks and bonds. Coordinating the inheritance with your own estate planning and legacy goals is key too. How does this new wealth fit into what you want to pass on? And navigating those family expectations versus your personal financial goals can be really tough, emotionally and financially.
So according to the guide, how does an advisor help when you receive an inheritance?
The guide says an advisor helps by evaluating how these inherited assets fit within your existing portfolio and your overall plan. They help you understand the complex tax implications for different types of assets and coordinate the timing of receiving them with other planning needs. They can help develop strategies for managing inherited businesses or real estate. And they can provide guidance on balancing those sometimes difficult family obligations with your own financial goals.
All right, finally, starting a business. Standard advice: write a business plan. Figure out funding. Keep business and personal finances separate. Get insurance.
Yep, the startup checklist. But for someone who already has existing wealth, the guide's next-level perspective stresses the critical need to coordinate those entrepreneurial goals with ensuring the family's financial security. It's not just about finding money for the business. It's about carefully deciding how much personal capital to risk versus seeking outside investors. It's about timing the launch to minimize personal financial strain. And structuring the ownership of the business smartly for future growth, yes, but also for your personal tax and estate planning.
So the beyond the basics issues include structuring that business entity, LLC, S Corp, whatever, effectively for your personal taxes and eventual transfer, and coordinating the business investment with your personal portfolio diversification, making sure you're not, putting all your eggs in the business basket.
Exactly. Even if the business is your main focus, you need to manage that concentration risk. Planning for the business's growth needs while still maintaining family financial security through diversification and having enough liquid assets. Managing the inherent risks of being an entrepreneur through the right insurance and asset protection strategies. And crucially, developing clear exit strategies from the start. How does this business eventually fit into your retirement or legacy plans?
According to the guide, how does an advisor help someone starting a business, especially if they already have some wealth?
The guide suggests an advisor can model different funding scenarios using personal money versus taking loans versus equity investors and show the impact on your personal finances. They help structure the ownership for the best tax and estate outcomes. They coordinate the business investment with your personal diversification strategy.
Okay.
They assist in planning for that inevitable income volatility, especially early on, and they help develop those exit strategies that align with your personal retirement and legacy goals down the road.
Wow. Okay, that's a really comprehensive look at how quickly things get complicated across so many different major life moments. It really hammers home the point the guide makes. When your situation isn't standard advice just isn't enough.
It really does. And this leads perfectly into the final section of the guide, which is called Connecting the Dots, the Role of Expertise. The guide strongly argues that the best financial outcomes, especially in these complex situations, usually happen when advisors get involved early, in the planning stages.
Right.
Trying to fix things or untangle messes after the fact, much harder, and you might miss opportunities.
Now, the guide mentions a program designed specifically to help people find this kind of expertise, called the Aligned Perspective, which is actually produced by Datalign Advisory. That's the program we're part of right here.
Yes, exactly. The guide explains a bit about how Datalign helps connect you with an advisor. It describes this AI-enhanced platform. You fill out a questionnaire detailing your financial goals, what you're looking for in an advisor relationship, the unique parts of your financial journey.
And then what happened?
The platform takes all that information and analyzes it against data from their network of advisors. The guide notes this network is pretty extensive, over 13,000 professionals. And apparently, 86% of them have appeared on Barron's Top 100 RIA list.
That's impressive.
It is. And the goal, according to the guide, is to recommend one specific advisory firm that seems genuinely aligned with your specific needs and situation based on what you shared.
And the guide also makes a point of saying there are no fees for you, the user, to use this platform or get the recommendation, whether or not you decide to actually work with the advisor they suggest.
Correct. And importantly, the guide points out that Datalign itself is a registered investment advisor. That means they're held to fiduciary standards regarding how they handle your confidential information.
Good to know.
The guide also briefly touches on how advisors typically charge, mentioning things like hourly fees, retainers, or fees based on a percentage of assets under management, or AUM. It even references some Vanguard research suggesting that comprehensive financial advice can add significant value. They estimate maybe 1.5% to 3% annually through things like better decision-making, tax optimization, and just behavioral coaching, keeping you on track.
And it's really crucial to remember, the guide states this, and we want to be crystal clear. We are discussing the guide's perspective here. We're talking about the resources it mentions, like Datalign. We're absolutely not providing financial advice ourselves on this deep dive.
Absolutely. That's critical. And all of this really circles back to that core concept from the guide, the aligned perspective.
Yeah.
It views your financial journey and your life journey not as separate things, but as the very same adventure. The guide puts it nicely. The moments that matter most in your life, marriage, home, family, career shifts, these are your wealth strategy in action.
So the right advisor then, according to the guide, isn't just crunching numbers in a vacuum. They're more like a strategic partner who really gets this deep connection between your life's big moments and your financial strategy through these crucial transitions.
Exactly. So, pulling it all together from this deep dive into the guide, the core takeaway seems pretty clear. Major life events are deeply personal. They often bring layers of complexity that, frankly, standard financial advice just isn't built to handle.
And based on the insights from this guide, seeking out professional guidance looks incredibly valuable, maybe even essential, for navigating these complexities well, for making sure your financial decisions truly line up with your life goals and your unique situation during these transitions.
Referencing that powerful concept from the guide one last time, the aligned perspective, really underscores how the integration of life's big moments is your financial strategy. They're intertwined.
It really challenges you, the listener, to think about your financial planning not just as managing money, but as intentionally aligning your resources with the actual life you're building.
Indeed. And that leaves us with that final provocative thought the guide offers for you to mull over. Your life has evolved beyond basic planning. Your guidance should evolve too. That's a wrap on The Aligned Perspective. I'm Claire, your fabulous AI host.
And I'm Henry, less fabulous, but also AI.
We hope this deep dive helps you on your unique journey. To connect with an advisor and access the source material discussed in this episode, visit datalignadvisory.com, the home of perfectly aligned finance.
And now, our disclosure statement. Datalign Advisory is registered with the U.S. Securities and Exchange Commission as a registered investment advisor. Datalign Advisory provides referrals to third-party investment advisors based on consumers' financial information, services required, and preferred relationship with an investment advisor, as reported through our questionnaire. Datalign Advisory does not manage client assets nor provide investment recommendations. For more information, including the company's Form ADV Part 2A and Form CRS, visit datalignadvisory.com.